Euro dollar. So the euro seen a bounce in recent trade, with the market having traded down to fresh multi-day lows ahead of this latest minor correction. At this point, the downtrend remains firmly intact, though this recovery rally does suggest that we could see additional upside before the market is ready to roll over again. Don't rule out the possibility for a break back above the 108 area and towards 110 before the market finally rolls over in favor of a resumption of declines in the bearish downtrend back towards the multi-year low from March at 104.62. But again, there is risk, while this market is a little bit overextended, for a bit more of a bounce before we see a resumption of declines. Inability to rally back above 108 followed by a break lower would suggest a more immediate bearish resumption, but we would need to see a break back below the low that we saw this week down at 106.17 to confirm and accelerate declines. Again, ultimately, rally should be well capped in the 110 area. Only back above 113 would negate the immediate bearish outlook, while a break back below this week's low would open the door for a more immediate acceleration down towards 104.62. Sterling dollar. So cable has been making a series of lower tops and lower lows since topping out by 159.30 this year, and the market looks to be in the process of looking for that fresh lower top after bouncing out from recent lows that we saw down at 150.27. At this point, a lower top is probably sought out somewhere in the 154 area ahead of the next downside extension back below the recent low and eventually down towards the 2015 low at 145.66. Really only back above 155.10 would compromise the immediate bearish outlook for cable. Dollar yen. So dollar yen is having a hard time in this latest impressive rally, establishing above the 78.6 fib retracements off of the 2015 high to August low move. At this point, the latest pullback suggests that the market could be poised for deeper setbacks, but we'll need to see a break back below the recent low at 122.22 to confirm and accelerate declines. Inability to take out 122.22 will suggest that the market is consolidating ahead of the next upside extension beyond that 78.6 fib retracement in the 123.75 area and towards 125.85 further up. Euro Swiss. So Euro Swiss is in the process of consolidating over the past several weeks, though while the market holds above 107.14, the consolidation is classified as a bullish consolidation, with eventual upside seen above recent highs at 110.50 and towards 112 further up. Aussie dollar. So Aussie is seeing a bit of a bounce in recent trade, though ultimately the market remains confined to a broader downtrend, and the bounce is viewed as corrective with a lower top sought out below 73.82 ahead of the next downside extension back towards and eventually below the multi-year low from this year at 69.08. At this point, only back above 73.82 would compromise the bearish outlook. Dollar CAD. So dollar CAD has been very well bid in recent weeks and in recent months, with the overall structure highly constructive and the market locked within a very strong uptrend. We have seen some recent setbacks over the past couple of sessions, but these setbacks should be very well supported ahead of 130 and ahead of the next upside extension back above the recent September peak at an 11-year high at 134.57. At this point, ultimately though, only back below 128 would compromise the highly constructive outlook for dollar CAD. Kiwi dollar. So Kiwi is seeing a bit of a bounce out from recent lows, though this bounce should be very limited, with the market confined to a broader downtrend and having recently looking to put in a lower top, a medium-term lower top, after stalling out in the 69 area. At this point, look for this current rally to stall out somewhere ahead of 67, ideally, in favor of the continuation of declines back down towards and eventually below those recent lows, those multi-year lows from August in the 62 area. SPX 500. So the S&P 500 has stalled out in recent trade just shy of the 2137 record high from May after the market had rallied up earlier this month to 2117. At this point though, the latest bounce will need to be well capped below 2117 in order to confirm a potential lower top and acceleration of declines back down towards and eventually below that recent low that we saw at 2003. Gold. So gold is traded down to a multi-year low at 1065 after taking out the recent multi-year low from earlier this summer at 1077, and this sets the stage for a potential breakdown towards next key psychological barriers at 1000 further down. At this point, at a minimum, the market would need to break back above 1100 to take the immediate pressure off the downside and open the door for a more significant correction.